all, I hope you are doing well in these. I'm still going to keep using the word unprecedented because it's appropriate, overused but appropriate. Welcome to the FinTech Finance Virtual Arena where we're hosting you today. Today I want to be talking a little bit about building up payment infrastructure and any kind of technology stack, but from an absolutely clean slate. Of how to do that if you were to start nowadays without any kind of legacy. Joining me today from ACI Worldwide, we have Ciaran. How are you doing today, Ciaran? All good, all good?
Very well, thank you, Ali. Hope you're keeping well.
Just about. Looking forward to getting out of this lockdown, I've got to say. And joining us from Kuda, we also have Babs. How are you doing today, Babs?
Hi, Ali. Good to be here. I'm doing fine.
First of all, I've got to say congratulations, Bab. 10 million fundraise. Not bad at all.
Yeah, not bad. Long process, but worth it in the end.
Excellent. I'm always interested with. I mean, we do a monthly wrap of all the kind of fundraising that happens, but it's always interesting seeing how sharp the curve goes as you kind of get further and further down with all the series of fundraising. But 10 off the bat, that's absolutely brilliant.
Yeah, I mean, I don't know if it's fortunately or unfortunately, but we're in a space where it is very capital intensive. So it was a long process, especially because it was done sort of a million miles away. I was in Nigeria and most of the investors were in Europe. So we literally concluded a $10 million raise over Zoom, which was pretty crazy. But yeah, I think it was worth it at the end of the day. We learned a lot, and already we have like big plans to be able to to deploy the capital and just start building a really big business.
Excellent. Well, let's take a look and take a step back at the market as a whole and also the entire infrastructure. Now, Ciaran, you know payments pretty well from what I gather. Let's take a sort of step back. What are some of the inherent problems of the legacy infrastructure of payments that you find literally all over the world? And how would regions such as Nigeria, how would they be able to leapfrog some of those particular issues there?
So I think when you think about payments globally, the first thing that normally comes to mind is just the systemic risk a lot of these systems have to be able to handle from a volume perspective. I think ACI, the stat we always come out with is we process $14 trillion a day globally. So if you think about the clients on the end of that flow of funds, the big thing is obviously, can it scale up? How do I ensure that I don't lose any of my payments? So I think that really forms a big problem and also a big opportunity for Babs and the guys in the neo-banking space, because you've got this inherent systemic risk and importance of the systems, and then you've got the consumers who are now more and more kind of saying, well, everything should be digital. And if you look at countries like Nigeria, where there's a very large unbanked population, I think of over 40% of people are non-banked today, the challenge then becomes, how do you kind of mold the fact that you want that rock solid reliability, but you also want to be able to move up the pace of consumers, many of whom are potentially wanting to demand the use of smartphones and new kind of payment technology, and don't really care about the back end systems as long as their payments work as they demand in their face-to-face and increasingly e-commerce scenario. So they're kind of the challenges. It's their systemic importance versus the consumer experience.
I think when we spoke back at the beginning of the year, one of the things that you said was one of the approaches we want to take is to avoid the "it's always been done that way" approach. What is the kind of sort of mixture of obviously the recent fundraising, but also where we are as an industry in terms of technology? What does that mean for you as to where we are at the moment, of what we can do?
Yeah, I mean, I think in terms of technology, it really kind of gives us an opportunity to build a different kind of tech stack. It gives us an opportunity to, actually build for what we know is what the future will be. So we can really tailor how we put together sort of the foundation of our company, which is our technology, and really make it suited to what we're trying to achieve. So just to give very sort of simplistic example, we have at Kuda, we have our own core banking that we've built in-house. So we own our own banking rails. And what we've done is we've built around it. We've built different businesses around that. So you have like the, sort of banking, you have in the future, you're going to have sort of the insurance platform play where you can offer other types of services. But what it means is all of these things can work independently of each other. And we're just simply connecting to, one source. So you don't have to wait till everything is ready. You can just continue adding, to things. If it doesn't quite work out, you can remove, so, and typically it hasn't really been the way banks have been built, in the past. So it just gives us a lot of flexibility into, how to serve customers. And it helps us to be able to respond to needs and trends really quickly. So, it makes us very agile. And it's just because, the technology is available today, and we kind of, we know what is coming, so we can build for that. So yeah, that's, so basically what we mean by sort of, not doing things how it's, inherently traditionally been done before.
So who has keys to your server room? Ciaran, thinking of that kind of approach, I just want to bring in the cloud very quickly, because that kind of building block approach seems to be is how you would do something if you're building it from scratch nowadays, as Babs has shown. What's your sort of approach to that in terms of using the cloud? I was joking around who has keys to the server room.
So I think stepping back, a lot of the challenges that are being faced today from a payments and banking perspective are the same whether you're a startup like Babs or an incumbent, as name of bank globally. I think the ultimate challenge comes back to the cost to income ratio, because historically banks have relied very heavily upon interest income, interest rates being very low, as well as transaction fees to generate revenue. And then obviously the cost base has been linear. I think what the cloud has really enabled, and what we're seeing and demonstrating with our customer base, is the fact that it allows you to actually reduce that cost to income ratio, because from a cost perspective, not only are you able to outsource a lot of the activity that is very time consuming and potentially costly internally, so obviously a big drag on that cost base, but also what the cloud allows, and what Babs has just touched upon there, it allows a lot faster provision and deployment, which means that you can innovate a lot more effectively and really start to transform your revenue base. So you can move from transaction-based services to more value-based services, whether that's a lot of the data analytics and richness of data that banks have historically processed via their transactions, or whether that's also kind of wider partnership networks to ultimately serve their customers in a more effective way, so that the customers can go about with their daily lives without being encumbered with the payments friction that maybe has been around in the last 10 years despite the rise of e-commerce. So I think that's really the power of the cloud. It's allowing you to focus on better serving your customers and transforming your cost and business model.
Thinking of that cost model, so looking at the example of Kuda, massive opportunity. I mean, as you mentioned, there's about 100 million people in Nigeria without a bank account.
Yeah, so I mean the stats, and you can tell I've obviously done some research ahead of talking about this with Babs, but I think the numbers I saw was, I think the penetration of electronic payments in Nigeria, something like 0.4, so 0.4 cards per inhabitant. If you think there's 200 million inhabitants, it's a massive opportunity. And I think the other piece, and listening to Babs on his 11FS podcast last week, which I thought he done really well on, Babs. I think the fact is that so many of if you step back, so many people today are underserved in their financial needs. So even things like, simple installment loans or microfinancing, it's going to be such a big opportunity moving forward. And the question becomes, how do you do it in a really succinct and customer-centric way? And that's really where that cloud computing comes in, because it allows you to focus more about your product and proposition offering and how you really attract and solve the customer need, as opposed to getting tied up in all of the regulatory oversights and provisions that often, consumers don't appreciate are needed until something goes wrong. So I think it's really that balance between customer innovation and then also ensuring that you're keeping the lights on and being effective from a regulatory standpoint, because both are obviously important.
Absolutely. Now, in the last 7 days, Starling Bank has announced profitability. So, woo, yes, well done, Anne. Well done, Starling Bank there. Which is phenomenal, because it definitely does show that model that they're approaching in terms of taking the tech stack is, well, it's working. It's not just relying on kind of VC money. It is focused on bringing on board customers that can actually generate revenue. Difference though between Starling and Kuda is Starling's in quite a saturated market. I mean, the amount of cards per household is probably 5 or 6, whereas again in Nigeria 0.4. So with that in mind, what's kind of the path to scale and profitability, looking at the opportunity of the amount of people in the market out there, not just for Kuda but for any kind of bank operating in that kind of emerging market?
Yeah. Emerging market and developed markets, very different, very similar in terms of, you can use the same technology and whatnot, but in terms of sort of the business dynamics and the way you approach the customers, very different. For us, we have an opportunity to sort of serve what the greatest demand is. And in an environment that the level of affluence is not as high as in as it would be in a developed environment, that banking need is more around sort of financing, credit, being able to sort of meet people when they need it the most, rather than in Europe you're kind of more geared towards sort of experience and other parts of banking. But that's not to say experience is not needed here. Good customer experience is needed as well. But there's just this big opportunity that there is a demand for credit. We are in an environment that interest rates, are relatively high or high enough to be able to justify sort of, the need to push credit. So we kind of are in a unique position where we're able to kind of do social good and at the same time be economically viable. So it's just about finding that balance. And then all the other things, wrapped around, what a typical challenger bank has in terms of, making it easy, making it accessible. I think it's even more important in emerging market, in an environment where people are not as sort of clued on to the intricacies and complexities of financial services. So it's even more so here, where we have to make it simple, make it easy, and really, I can't emphasize the term simple enough. It really needs to be that simple for people to use it. And then we're very confident that we would get to a level of profitability fairly quickly. I don't think we will need to raise, hundreds of millions to become profitable. We would need to raise, a good chunk of money, like Starling did. They also had to raise a bit of money just to get it to that point where the business is running smoothly and can start paying for itself. So we look forward to being profitable. In the not too distant future. There is a path to it.
Absolutely. Ciaran, did you want to weigh in on there in terms of scale and the path to profitability?
I think what Babs has said there is probably an important point. I think Starling in particular, you and I obviously have conversations about Starling very regularly. I think the great thing about Starling was that they actually had a clear path on what they were going to do, and they didn't shy away. I think too often, from my perspective, people tend to and as a former banker, people vilify the banks for what's happened previously, but ultimately I think what it comes back to is how they're actually serving society and the needs of society. So what Babs has said there around the fact that many people are underbanked, particularly in the growth and emerging markets, is really important, and it's how you actually unpack that need and actually marry it to the technology. And that for me is really why I think, you know, there is so much of a drive we see in the evolution and revolution of cloud computing, because it allows you to better serve your customers and ultimately reduce the amount of time that you're having to spend on you know, hardcore technology or regulation, which is important, as I said, but ultimately is not why customers are going to bank with you. And that's really the balance. So, you know, kudos to Kuda, without kind of being too much of a pun intended, but I think it's you know, there's a societal good in that is really important.
Yeah, I mean, I really like the sort of the concept of cloud, so a cloud bank, basically, and an API-driven cloud-based bank is you can literally just move with the growth. It's literally a switch, you know. In fact, it's not even a switch. It's automatic. As you grow, your server space basically just expands with you, and you really don't have to do anything. You know, it's kind of like that kind of pay-as-you-go model. And it does really allow you to scale very quickly without having to keep coming up with additional infrastructure. You know, if we could do it with one of the challenges we're having is, you know, in the quest for great customer service, you know, we do try to automate as much as possible, but as you scale, you also have, you know, you need to have humans. You need to be able to speak to somebody. Especially, you know, when there's no face, there's no brick and mortar. People do feel comfortable if you know, at critical times you can speak to someone. And if there was a way we could do that, just the way cloud servers have been done, because, you know, it would definitely reduce our real estate presence. You know, as we grow, customer service grows, we kind of have to have more space. We have to move and keep moving. So I mean, it's quite interesting, and I'm looking for a solution for that. If, you know, how can we keep scaling people without space? I know I'm saying this in the middle of sort of COVID and lockdowns and people working remotely, but, you know, ultimately, you know, there's a lot that you can achieve in one place, you know, shared services and, you know, stuff like that. You know, if there's a way to do that, that would be, I think, super interesting and help the quest for a truly sort of digital bank as well.
And that, for me, just kind of building on that point, that's one of the really important things, I think, for the cloud adoption, because whilst people are going to move towards the cloud because of that cost to income ratio challenge that they've got, I think some of the benefits of the cloud that are definitely, you know, starting to come to the fore and are going to be kind of crucial in the coming years are things like Babs has mentioned there around the value added services, where today you're still very dependent upon your people. Obviously, one of the big benefits, you know, if you speak to any of the cloud providers that they'll obviously pitch, is not only can they get you faster time to market, not only can you scale up and scale down, but also the use of the automation and intelligent computing that they overlay is kind of going to be crucial to banks not only being able to serve their customers more effectively and provide a better customer service, but also come up with new products and capabilities. So I think Babs is spot on with what he's saying there, because the last thing you really want as a consumer is to have a great customer experience and then find that you've got to phone in to actually speak to someone and that doesn't kind of fly right. Digital innovation is going to be crucial.
Yeah.
Absolutely. Looking at that, as we've talked about, you know, the cost ratio, I want to look a little bit around payments as a whole on the technology stack. I saw an incredible stat that this year digital payments have increased by 60% in some regions, which for context is like going from the height of Danny DeVito up to the height of Sun Mingming, the second tallest basketball player. Just to kind of illustrate that point. With that in mind, how do we kind of bring that in, and what strains does that put on the infrastructure? Because that's a very high volume of individual transactions, but the amount is decreasing per transaction. So rather than going back to kind of a world of batch-based payments at the end of the day, what can we do to kind of sort of solve this problem? Because I'd imagine in somewhere like Nigeria as well, that problem is going to be only exacerbated tenfold.
That's the whole point, though, of sort of, you know, cloud-based, you know, technology and new age technology. We need to be in a position where, you know, as we scale, we're also understanding the speed of growth typically with, the old structures where, you kind of just have to prepare and anticipate that scale, which, it doesn't work. You can't truly anticipate the scale, but with current technology, again, going back to cloud technology, it's literally like a switch, and it's so vast, and that's the whole point, to deal with sort of this problem, and that's why I think, in emerging market, like a country like Nigeria, there's going to be so many people that are going to be doing so many transactions, small transactions. It just really makes sense to build, a business, not just in financial services, but almost in any business that's sort of driven by the cloud. That's the whole point. That's how I imagine, there's no, so far, I'm not aware of any other sort of way to kind of scale, a business. But yeah, that's why they've been so successful to date, I think,
And I think adding on to that, if you look at some of the markets, so the emerging markets have definitely kind of enjoyed that leapfrog over maybe some of the existing markets. I think if you look at some of the, Africa has obviously got a very big opportunity in the coming years, given the unbanked population. If you look at other kind of emerging markets that have really kind of led the charge in the last couple of years, I think India is probably the biggest, right? And if you look at some of the stats on the adoption of the UPI capability, there is a massive transactional throughput and volume. And being the lead and immediate payment provider in India, what we've really had to do there is adapt and adopt not only a cloud-first standard, but also ensuring that, as well as kind of scaling up your infrastructure for the transactions, we've also had to really think about that payment intelligence and fraud on the back end. And that, again, is something that's so powerful from a cloud perspective, because number one, people are very concerned around, transactions are growing, they're going online, they're electronic. How does that impact me from a fraud loss perspective? But the second thing as well then is, there's nothing worse than getting a transaction incorrectly flagged as a fraudulent transaction and having that negative experience at the base. So again, I think that's really how the cloud provides benefit, because it not only allows you to scale up for ever increasing volumes and also scale down, so you're only using what you need, but again, it really allows you to think differently in how you actually package and bring that technology capability to market, to ensure that you're serving your customers' needs and spending more time on generating revenue for them, as opposed to dealing with all of the compliance and regulatory overheads that go with it.
Well, I don't know, Ciaran. If we're going to start, just starting a bank from scratch, I like the idea of fraud being kind of an afterthought, something that you plug in once you've got everything set up. Is that not how it works in banking?
Well, I don't know. You tell me. Ali, you speak to a lot more than me. But no, I think that's something. And I think the important thing is, and it goes back to what we said earlier, the art of banking is not particularly complex in the fact that it's providing funds to those who need it, in an increasingly transparent manner. And I think just having that ability to do it in a seamless way that really resonates with your customers and serves everyone who needs it. I think I've seen a stat a couple of years ago where the World Economic Fund was saying that having incorrect access to financial services is the biggest driver of poverty. It's something that still is absolutely here, and it's obviously why it's so important that the likes of Babs and the other neobanks are kind of coming in and providing that technology to actually solve that problem, and in doing so, obviously do it in a secure manner, because customer experience and security is going to be the two real big drivers, I think, for banking and the transformation of it in the next couple of years.
Yeah, just to go back to your point, Ali, about sort of fraud, we had in the back of our minds, okay, what are all the fraud issues that could come up? And we built, in anticipation for that. But you realize, especially, going from scratch, starting the bank from scratch, you will realize that actually, people perpetrating fraud or attempting to perpetrate fraud are also, some people have a PhD in it. They move with the times. You can't prepare for it. You literally have to sort of, and that's why the flexibility in the technology you used to build is absolutely critical, because things are happening so fast, and evolution of sort of, financial services is moving so fast that you're not actually necessarily building to prepare for a particular fraud. You need to build to prepare for any kind of fraud that may, arise. And we found that, when we started, we found that, we thought things like saying, oh, if you reduce the amount of sort of transaction that someone could do, it would prevent it. But no, all they simply did was just do that transaction lots and lots and lots and lots of times. They would painstakingly try and do 1,000 sort of transactions of the same small amount, and painstakingly attempt to move it out, doing 1,000 different types of transactions. So you need to have sort of ways to checkmate that. So we've built sort of red flags around certain, put parameters around that. And we can only do it because of the flexibility of our tech stack and the way we've built Kuda. So yeah, it's really important to just be flexible, to be able to cater for all these inevitable activities.
Excellent. The very last thing I kind of want to touch on, and just throw this onto you, Babs, is without this legacy of the old payment systems, can what you're working on at the moment, what you're building, can that really sustain and be the kind of basic infrastructure for the next 10 years? I.e., in 10 years' time, how can you ensure that what you're doing now is going to still be holding everything up in a decade's time?
I mean, look, what we're doing now will hold up in a decade's time for sure. But the question is, what will happen to sort of the legacy infrastructure that is in existence today? Is my expectation is, because look, we still have to connect to each other. The world we still have, integrations with, some of the traditional banks. We still have to connect to a central switch. We still have to have shared services when it comes to, ATM transactions. So there's still a lot of, you can't isolate, your own tech stack and say, yeah, you're not going to sort of work with anybody else. It's not possible. However, I believe and I hope and actually expect that as sort of technology improves and as companies such as Kuda pave the way and show that look what you can do with, building a financial service company this way, we can start seeing, the change, and it will be gradual. It's not going to be, overnight. And we're already seeing it, even big banks are already trying to build in a different way. We saw it with just, early a few years ago, started with having innovation departments, and focusing more on a CTO role rather than just a CFO and a CEO role. So it's going to be a process, a gradual process. But I think in 10, 15 years time, we're going to see a shift towards what the way the challenger banks have built their products. Traditional banks are going to move towards that as well. But because they're so big and they've had so much success over many, many years, it's going to take time to get to that point. But it's happening. We're seeing it already.
Excellent. Very well said. Ciaran, did you want to weigh in on there in terms of the next decade?
Yeah, so I think just kind of echoing what Babs has said, I don't think it's about, is the architecture of today fit for the next 10 years? It's about saying that the architecture, like the rest of banking and even life, in society, is going to move so fast. It's going to be around constant iteration and moving beyond that innovation theatre that has probably, took hold in a lot of banks in the last 5 years, and really actually bringing it forward to more customer-driven outcomes. So I think the big thing that we've really seen in the last 18 months is we've really embraced the cloud for the transformation purposes, to show here's how all of our customers can ultimately benefit from moving their architecture forward, and how ACI can actually unlock value for them in helping navigate that minefield towards the end of kind of mainframe infrastructures and into cloud computing, where they're focused on their customers and competing with Babs and the neobanks, and we're actually focused on ensuring that their tech stack is optimized to run in the cloud and ultimately scale up to all of these new transaction volumes and revenue streams that they're going to have to evolve towards in the coming years. So yeah, I think it's exciting times.
Excellent. Well, guys, thank you so much for taking time to speak with us today. Ciaran, where's the best place to find out more about yourself? Where's the best place to reach out to you?
I'm on LinkedIn, Ali, and I'm probably the worst millennial for social media, but LinkedIn is where to find me. And also I can be found at Ciaran.Chew@aciworldwide.com.
And that's the same for your Snapchat and TikTok as well, right?
Absolutely, yeah.
Babs, where best to find out more about yourself and Kuda, apart from the excellent 11FS podcast last week?
Yeah, I'm just setting up my TikTok and Snapchat. So it will probably be the same as my other social handles, Babs Ogundeyi. I'm on LinkedIn, I'm on Twitter, I'm on Instagram as Babs Ogundeyi. So you can, just see me there.
Excellent. Thank you very much, guys.